Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that Germany has decided to suck up the cost consequences and separate itself from its dependence on Russian oil. It is a move that will fast-track one of the world's largest economies away from fossil fuels. But it doesn't come without high risk. But first in the US, residential resales fell 2.7% in March from February, a second straight month of decline, and the sales rate is now at its lowest since June 2020. Higher mortgage interest rates are weighing on this market, but median dwelling prices hit an all-time high of 552,000 New Zealand dollars. And the Fed's April Beige Book survey showed a resilient American economy despite high inflation and never-ending supply chain problems. They report their economy expanded at a moderate pace in February through to early April, even if there was little respite for businesses from high inflation and the labour shortages. And Canada's CPI inflation came in much higher than expected. Analysts were looking for a 6.1% rate in March after a 5.7% rate in February, but it came in at 6.7%, and that is a 31-year high. Actually, sharply rising dairy prices played a not small part in this increase. Join us for the New Zealand March CPI release at 10:45 this morning, where our markets are anticipating a 7.1% rise, and for us that would be a 32-year high. Taiwan export orders, which are a bellwether of global technology demand, rose faster than expected in March, setting a new high for the month. But their government warned of much slower growth in April as a consequence of the Ukraine war and ongoing supply bottlenecks. And German producer prices were expected to rise sharply in March, even faster than for February, and their highest in more than 70 years. But those forecasts proved to be understated, and the actual rise exceeded 30% rate, almost all driven by a sharp increase in Russian fuel. This is steeling them for a complete break from that Russian stranglehold. Overnight, their foreign minister declared Germany will halve oil imports from Russia by July and take them to zero by the end of 2022. Germany currently buys a quarter of its oil and 40% of its gas from Russia. The dramatic policy shift won't be without some tough cost though, but it looks like it's happening and fast. In Russia, panicked citizens withdrew foreign currency worth almost $10 billion from their accounts in March, and banks cut corporate lending by about a third. The US Treasury 10-year yield starts today down 7 basis points at 2.84% and giving up all of yesterday's jump. And the price of gold starts today down $22, so now at $1,956 an ounce. And oil prices are unchanged in the US at $102.50 a barrel, while the international Brent price is down $1 at $106.50 a barrel. And the Kiwi dollar will open today up a 3/4 cent at 68 US cents. Against the Australian dollar, we're very marginally firmer at 91.3 Australian cents. And against the euro, we're nearly 1/2 cent firmer at 62.7 euro cents. That all means our trade weight index starts today at 74.1 and a 50 basis point rise. We should also note that the Chinese yuan slipped to a 6-month low against the US dollar yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.